morning friends, welcome to Sharekhan pre-market view. Indian markets yesterday had a very terrible session in terms of the overall indices which show a very sharp and deep correction. Sensex fell by more than 600 points while Nifty was down by more than 180 points. This was after fear emanated from the jobs report in US that the interest rate hike by US could be earlier than anticipated. However, if you look at yesterday's session in the global markets, especially in the US market, they had some sort of rebound which came in yesterday. Dow was up by about 139 points, Nasdaq was up by 15 points, S&P put on a 8 points gain. Currently, Asia is mirroring the gains which were seen in the US market and is up. Yen is trading at close to 3 months low, which is spurring up the exporter stocks in Japan. Whereas Singapore Nifty is indicating a positive opening by about close to 19 points. If we look at the flows yesterday, FIs were buyers to the tune of 838 crore in the cash market. They were big sellers in the index future of close to 1885 crores in the index future, whereas DIIs were marginal sellers of 35 crore in the cash market. Now after this gap opening of 19 points, how Nifty would behave throughout the day, let's have a view from the derivative desk.
Good morning friends, let's have an analysis on derivatives. In yesterday's market we have seen Nifty showing a sharp cut. In the opening of the trade we have seen Nifty opening up with a gap down opening due to negative cues from the international markets across the globe as of the fear that US Fed Reserve might cut interest rates sooner than later due to above expectation and employment data, and due to which we have seen a sharp cut, and Nifty have seen a cut of around 2.5% at 87 and settling at 8784.85. Now the open interest terms we have seen a reduction of 3.5% in open interest, that is around 9.5 lakh shares were shaded in open interest. However, the cost of carry have also decreased from 9.5 levels to 6.5 levels, that is 7 odd percentage, indicating long unwinding pressure. And yesterday's trade was observed by market participants. Put call ratio in line, seeing a sharp cut. Now the sharp cut was seen due to selling in across the board, that is banking and financial being the weakest sector in yesterday's trade, and followed by automobiles, infrastructure, metals and pharma. Most of the sectors have seen a significant cut in yesterday's trade, and put call ratio have also seen a sharp dip from 0.98 levels to 0.92 levels. Now the sharp dip was mainly due to significant amount of position which was built up in call option, and simultaneously put option have seen significant amount of unwinding as put writers have been forced to square off their short positions, and due to which we have seen a sharp cut, and due to which we have seen significant unwinding in 8008, that is at the money and slightly out of the money strike price of put option, that is 8800 and 8700 strike price. Indian volatility index have been after seeing a sharp decline since budget. We have seen in yesterday's trading session Indian volatility index have seen a sharp jump of around 10 odd percentage and settling at 15.82 levels from 14.44 levels. Now the options activity has suggested there was significant amount of build up seen in 8800 call option, 8900 call option. More than 100 odd percentage build up, that is the operators have got almost double in yesterday's trade in both the strike price. That's not a positive sign for the market, as 8800 and 8900 will continue to remain as a stiff resistance going forward for this series, while 9000 call option continue to dominate and is now highest in terms of open interest with around 54 lakh shares in it. While in put option we have seen the position have got shift from 8800 strike price, which was the highest in terms of open interest, and in yesterday's trade we have seen significant amount of unwinding in 8800 and 8700 strike price both, and the position have got shift to 8500, which is now the highest in terms of open interest. However, 8500 continues to remain the strong support for the market going forward for this series, and in yesterday's trade also we have seen a minor build up of around 7 odd percentage, and it's high with and is highest in terms of open interest with around 47 lakh shares in it. There is only one securities in bank period for today's trade, that is Unitech. The FIs front also they have been negative in yesterday's trading session. In index futures they have been selling they have found selling of around 1884 odd crores, and the open interest of FIs in index futures have gone down by 3 odd percentage, indicating a mix of long unwinding and also some kind of short positions was been created by FIs in yesterday's trade in index futures. While in index options, they bought significant amount of around 3,000 odd crores, and if we see majority of the build-up in options side was on the call side, so it was a complete hedge which was been observed by FIs in yesterday's trade, that is shorting index futures and simultaneously buying index call options. While in stock futures there were net buyers of around 175 odd crores, and in stock options there were net sellers of 25 odd crores. 5 days we have stands at 8950 with a lower range at 8700 and higher range at 8950. SGX Nifty is trading positive by 7.5 points, taking positive cues from the international markets, and it's trading at around 8774.50, indicating some kind of positive opening can be seen in today's trade. Thank you guys, that concludes from my side.
Friends, let's have a look at the trading ideas for the day. Ministry of Railways has sanctioned implementation of the Eastern Dedicated Freight Corridor and the Western Dedicated Freight Corridor with freight train speed of maximum 100 kilometers per hour. Now this is extremely positive news which has coming for companies like Concor and GDL. So one can long Concor with stop loss of 1575 with potential upside of 1645, and one can also take long GDL with stop loss of 399 for potential upside of 414 and above that at 419. In another news, the Andhra Pradesh government is planning to distribute close to 2 crore LED bulbs to 1 crore household by March 2016. Now this would be extremely positive news for some of the LED manufacturers like Havells, Surya Roshni, Crompton, etc. However, we feel one can take long positions in Havells with stop loss of 277 for potential upside of 292 and above that at 296. Whereas one can take long position in Surya Roshni with stop loss of 114 for potential upside of 122. Moving on to the news update, yesterday ITC has indicated that the company is targeting to achieve sales of close to 1 lakh crore by 2030. Monnet Power has backed the Utkal C coal block for close to 9,500 crore. Now Spectrum auction, the telecom Spectrum auction is going underway. Yesterday the 31st round and the 5th day auction got closed. Till now we have seen bids of close to 94,000 crore. So the auction is getting overall extremely heated, and this is going to put pressure on existing telecom players like Bharti and Idea. Now TLF has tied up with Snapdeal for selling flats online. Rail Ministry has received close to 10,000 crores of investment commitment from private sector. Also, Sun Renbaxi has received final nod from High Court and has received approval after CCI and earlier the US courts have given the approval. So this paves the way for the merger of two pharma companies. Suven Life Science has been granted a patent by Eurasia and Israel for drug used in the treatment of neurodegenerative disease. Now with this, the total amount of approvals which have been granted to Suven till date have come to 14, out of which most of them is from Eurasia and 3 from Israel. Blue Star will set up its 8th manufacturing plant in South India with an investment of about close to 150 crore. The company is currently scouting for land to set up this plant, and this plant would have capacity of close to 5 lakh units per annum manufacturing. FIs can invest up to 49% in Time Technoplast. Reliance Retail is again looking to start online sales from April to May of this year. Pipavav Defense yesterday had CDR meet. The CDR meet has ended inconclusive, so that's a bit of a setback for the company. In terms of IPO flash, we have Adlabs Entertainment which is coming out with its IPO. The issue is going to begin from today, and the issue is going to get closed on March 12. The issue size is close to 449 crore to 468 crore depending on the price band. The lower end of the price band is at 221 rupees while the upper band is at 230. The discount for retail investors would be 12 rupees. Moving on to watch list that we created for the day, stock with positive bias, we have Hindustan Unilever CMP 972, Aurobindo Pharma CMP 1103, Voltas CMP 258, and the stock on the negative side we have Hindalco. Moving on to stock for long-term investment, we continue to like stock like L&T, Aditya Birla Nuvo, Tata Motor, DBR, Infosys, and Ultratech Cement. That's all we have in today's session. Thank you.